Before we head into next week, I think the US stock market may be entering a very critical phase right now. If you actively trade US stocks, or if you're focused on AI infrastructure, semiconductors, and tech investing, then this video is definitely for you. Hi everyone, I'm Kevin. I don't tell stories, I focus on data and logic. So if you really want to understand what's happening in the market, make sure you're subscribed. Now, let's get straight into today's analysis. Because after yesterday's rally, the real question is no longer whether AI stocks are still strong. The real question now is, has the overall stock market started entering a phase of excessive optimism? SPY pushed all the way toward the 750 level, and in my opinion, a large part of this rally was driven by the market pricing in optimism around the China trade negotiations and Trump's visit to China. Especially in tech stocks and AI names, sentiment has clearly accelerated recently. But now, a much more important question emerges. What is the next real catalyst capable of pushing the stock market even higher? Because realistically speaking, the only major event still capable of driving both the AI sector and the broader stock market higher may be Nvidia earnings. But here's the problem. Wall Street already expects Nvidia to deliver strong results. The real question is, can Nvidia perform well enough to exceed what's already been priced in by the market? Can it reignite another wave of euphoric buying across AI stocks? Honestly, I'm not completely sure. Because over the past few days, one topic we've been discussing constantly inside the community is this: the US stock market is starting to feel overheated, especially as I continue monitoring options flow tied to both the Nasdaq and SPY. On the surface, the stock market still looks strong, but underneath the surface, smart money is beginning to show meaningful divergence. QQQ is already seeing more defensive positioning, while SPY flows remain relatively strong. So what does that tell us? It suggests the stock market may still attempt one final push higher, especially AI stocks and large cap tech names, which could still rally further. But at the same time, internal momentum across the stock market is already starting to weaken. And if this continues, the most important story in the market may no longer be broad upside expansion. Instead, it may become sector rotation, because not every AI stock can continue going straight up forever, especially many semiconductor stocks, which have already experienced massive rallies and may now begin entering a cooling or consolidation phase. But then the next question becomes, if capital starts rotating out of semiconductors and AI hardware stocks, where does that money go next? One area I've been focusing on very closely is software stocks. Enterprise AI, cloud infrastructure. And that's exactly why companies like Microsoft, Palantir, and ServiceNow are starting to look increasingly interesting. Because if AI hardware begins cooling off, Wall Street capital will likely begin searching for the next phase of the AI narrative, and software may very well become that next phase. If you enjoy this type of US stock market analysis, AI narrative breakdowns, capital flow analysis, and macro market discussion, make sure to subscribe to the channel. Because every day we break down what's happening in the stock market, where Wall Street money is flowing, and which AI and tech stocks may matter most in the next phase of the market. Now let's talk about SPY. One thing I've been consistently warning about inside the community is this. This breakout in the stock market could easily become a classic bull trap. In other words, a fake breakout. SPY broke above major historical resistance and stayed elevated for several days. But by Friday, the broader stock market was already beginning to lose momentum. And that matters, because don't forget, the stock market has already rallied for 7 consecutive weeks. At some point, you have to ask yourself, how much good news has already been priced in by Wall Street? Personally, I still believe the stock market could continue pushing higher early next week, especially AI stocks and large cap tech. But the real question is, what happens after that? Because this market is increasingly starting to feel like a liquidity-driven rally. not a fundamentals-driven rally. Now lastly, I want to talk about a very interesting small-cap tech stock that recently entered my watch list. And no, it's not Poet. We've already discussed Poet extensively inside the community over the past several days, including profit-taking zones and stop-loss management. Because once small-cap AI stocks enter euphoric territory, risk starts rising very quickly. But another small-cap tech stock that recently caught my attention is quantum computing, and this stock has shown extremely strong price action recently. But another small-cap tech stock that recently caught my attention is quantum computing, and this stock has shown extremely strong price action recently. Honestly, the reason I first noticed it wasn't because of fundamentals. It was because of the chart structure, momentum, and capital flows. I started noticing that capital inside the US stock market has been aggressively rotating into these quantum computing related small cap tech names. And this particular stock has started showing unusually strong volume and price movement. Especially yesterday, the move higher was extremely aggressive, and honestly, this type of behavior perfectly reflects the current condition of the stock market. High emotion, high volatility, high risk appetite. Of course, small cap tech stocks carry significant risk, so I'm not telling anyone to chase the stock higher. I'm simply pointing out this. Capital in the stock market is becoming increasingly willing to take risk, and historically, that usually signals that overall market sentiment is entering a euphoric phase. Lastly, let's briefly return to software stocks, because I believe this may become one of the most important areas to watch in the US stock market next week. Microsoft has clearly started regaining momentum. Palantir continues holding up relatively well, and ServiceNow is one of the software stock charts I'm watching most closely right now. Because after experiencing a major correction earlier, the chart structure is finally starting to improve again. And if ServiceNow can continue holding key levels next week, I believe it could become one of the biggest beneficiaries of the next sector rotation. Because ultimately, the biggest question facing the stock market right now is this. If semiconductor stocks finally begin cooling off, where does Wall Street capital rotate next? And software may ultimately become the answer. So overall, here's my view heading into next week. Stock market sentiment is becoming increasingly elevated. AI stocks remain extremely strong. But beneath the surface, sector rotation is becoming more and more important. And in this type of environment, understanding capital flows often matters far more than simply chasing headlines. Remember this, Wall Street chases headlines, but smart money always positions around capital flows. Thanks for watching. If this helped, make sure to like and subscribe. Drop your questions in the comments. I'm Kevin, and I'll see you in the next one.